So basically, the question I'm often asked is, should I invest in an ETF or a mutual fund? And let's see what we can say about those two different things. First of all, if you look at a mutual fund, their marketing strategy is selecting the best stocks. So basically, they would say that they have a lot of great stock pickers, they have a lot of inside information, they know a lot of things about the stock market, and therefore know how to find the very best stocks. The downside, and most mutual funds are actually pretty open about this, is that they charge fees for that, and clearly that is reasonable. If you pay your carpenter to fix something, he should get paid, and if you are paying someone to do your stock picking, you also need to pay them. But in my opinion, these fees that these mutual funds are charging, I think they're high fees, and that's actually something that you can see really being reflected in the return that these mutual funds post afterwards. On the contrary, you have something like the ETFs, and you're basically buying the market. So you can have an ETF that is tracking, say, the S&P 500. So basically, you are buying the whole stock market. And for that reason, you will also see that they have very low fees. Basically, because you don't need any stock picker, you don't need anyone to monitoring the market. You just buying the market, and yeah, so that is like the two opposites thing here. You have the mutual fund where you select individual stocks and you pay a given fee for that, and then you have the ETF, where you're really just buying the stock market and therefore has low fees. So what should you choose? And what I tried to do was to give like really generic example here. And what I'm saying is that before fees, let's assume that a mutual fund will give 11%, and you might have another mutual fund that will give you 9%. And then say, well, after fees, which might be 2% a year, it will only be 9% and 7% respectively. And if you compare that to the stock market, just complete generic 10% return, and as you see, those 10%, that is derived as the difference between 11% and 9%. So basically, after fees, these mutual funds will actually perform worse. Now, again, this is a generic example. And you might be thinking, well, I know some mutual fund that can do a lot better. Because even though that you probably agree with me that basically the market is an average of everyone, then you might say, well, yes, the average is fine, but we know that someone is always doing better than the average. Just as we have Michael Jordan, he would always be better than the average. So why can't we just choose a mutual fund that is doing better than the average? Now, I have in general 3 different things I want to say about this. The first thing is that who is picking your stocks? I think that is really intransparent. So if you're buying a mutual fund with one of the big banks out there, you might have this guy, let's call him Jack. He is the best stock picker on Wall Street, and he will always be picking stocks better than the average. But who is saying that he will be employed in your bank next year? Who is saying that he will be picking stocks for you 2 years from now? We don't know that. And the other thing is that when you look at these returns, very often you'll be looking at short-run returns. So you might have like 2, 3, 4 years, and you have a mutual fund who is doing better than the market. But what about the long-run performance? I think everyone who is really interested in the stock market knows that you can't really measure performance over like 2, 3, 4 years. That is way too short of a time period. And the other thing is that even though that you might be looking at a somewhat longer time period, what about the risk? You don't know if this Jack here is really way too bold. He's taking a lot of risks. And so there's a lot of very intransparent things that I don't like about mutual funds. So unless you really want to educate yourself in stock investing, very often I would suggest that you would invest in ETFs, and definitely more ETFs than mutual funds in general.